This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more. Welcome back to the Commercial Real Estate Investor Podcast, live from the Cobble Group Studios here in Nashville, Tennessee. Today, we're diving into another round of office hours. You've got questions on commercial real estate, and I'm here to answer them, at least to the best of my ability. Today, we're going to be diving into an interesting Reddit thread on what investors wish they knew before diving into residential real estate. I'm going to relate that to commercial, and we're going to talk about all of the things that I wish I knew about commercial real estate before I jumped into it. And I want to hear from y'all. Question of the day is, what do you wish you knew before you jumped into commercial real estate? I know there's a lot of lessons learned that we could all take away from that. We'll dive into kind of what I've been up to, what I've got coming up. We'll jump into the Reddit thread, and then we're going to open it up for your Q&A, and I'm going to dive into all of your questions. So this past week has been a good one. Wanted to let you know, if you're in the Nashville area, every other Thursday I have a commercial real estate investors breakfast. Really, it's usually just coffee, hanging out at Retrograde Coffee, 7:15 a.m. On Thursday. So we just had one last Thursday, so the next one's probably in a week. If you're listening to this, I don't know when you're probably going to listen to it. So shoot me a message on Instagram if you want to get added to that invite list. It is open to anybody that is interested in investing in commercial real estate, wants to just come and hang and talk about commercial properties and what we've got going on. It's a great group of people. I was in Chattanooga on Friday, meeting with a bunch of subs, getting ready for our self-storage development out there. We're building 350 indoor climate-controlled self-storage units within two of the buildings that I own at the Peerless Mill. That's going to be a very fun project. I'm really looking forward to that because it's really it's interesting, right? It's going to be a lot of fun telling you guys about it. We're going to document every bit of the journey, of course, but I am in a 1031 exchange. And so I sold a property at the end of November. We basically, at this point, have 120 days, give or take, to spend $1.5 million building this thing out. So it's going to be quite a journey, that's for sure. So looking forward to that. We were up there all day, meeting with subs, touring the space, met with a couple of the tenants that we have out at the property there, and I'm about to have to replace one of the roofs, which is never fun. But sometimes you just have to do it, right? It's like $150,000 that we were not hoping to spend, but hey, I guess it makes the building better. Keeps the tenants happy. In the next couple of weeks, I'm actually going to be down in Atlanta for a day, basically. We've got one of my CRE Accelerator pods. So if you're in the mastermind, we break everybody out in these 4 to 6 member pods where they get together once a week or once every 2 weeks and have their own calls and kind of hold each other accountable and underwrite deals together, dive into projects together, all that kind of stuff. I have my first pod organized meetup, which is really cool. I'm really excited to see that. So I'll be down there for the event. They've got a pretty big private equity fund that's going to be coming and talking to the group as well. A couple of friends of mine that own a fund out there, really a syndication. The guys that actually taught me how to syndicate. I didn't know anything about it until I met those guys at Greenleaf at a mastermind back in like 2017. So really cool to be going down there and hanging out with them. And then also, if you're going to, if you're interested in any conferences or events this year, I'm speaking at the Best Ever Conference in Salt Lake City, March 3rd through the 5th. So if you're planning on being there, or if you weren't and now you are, come say, hey, I'm going to be there hanging out. And so when I'm not giving my talk, I'm going to have a lot of free time. So I want to hang out with you guys and talk more about commercial properties. All right, let's dive into this Reddit thread. We're going to have a discussion around what you wish you knew before diving into real estate, and then we'll jump into y'all's questions. So this one popped up for me this morning. I thought it was pretty interesting. Things you wish you knew before you invested in residential real estate. Obviously, it's residential. We're going to take the commercial approach. A lot of these same lessons do apply to commercial property owners. So kicking off the thread, this person's saying, if you're buying older properties, you won't catch everything in the inspection. There will be deferred maintenance that only pops up once. Some like a tenant is there, slow leaks, HVAC issues, that happen intermittently. You should budget for your initial rehab and monthly maintenance CapEx, but you should also expect the first few months of occupancy to have a greater than normal cost of repairs and maintenance. That is exactly why when you're buying commercial properties, you come in and approach it in a very conservative manner, right? You want to make sure that you have a contingency budget built in, a CapEx budget built in, because while inspections come back and say everything is fine, more often than not everything is fine. And you just won't know until somebody is occupying that space full time. Or honestly, the seller's not going to tell you, and then you take it over, and the first thing the tenant tells you is, hey, we've got a problem. That's always great to learn. It's when you first buy a property. For example, the building that is actually in the thumbnail of this video, of this live stream, that's a building that I bought. It was my first property, $575,000, a little 6,000 square foot building in a suburb here in Nashville. And everything came back on the inspection perfectly fine. 2 months in, the HVAC blows out, and it's a very interesting system. They somehow managed to get this entire thing into the basement of the property, which if you saw the access to the basement, like this thing needed a crane. I have no idea how they got it in there. So we ended up having to get all of that hauled out and replaced. And we decided to just put it back into the basement instead of putting anything on the roof because we didn't have too much roof space, just with the way that there was a penthouse and it was kind of awkward. Ended up costing us $20,000. $20,000, like 2 months into owning this property, had no idea that I was going to be spending that. But fortunately, we came in conservatively. I had enough of a capital expenditure, CapEx, budget to more than cover that. And so I was able to just draw down on our line of credit from the bank to pay for that. And it was great because I didn't have to go to my investors and ask them for more capital. That is the last thing that you want to do when you're raising money from investors to do these deals, is to get in, something breaks, and now you've got to go back to them for more money. It also just starts to, one, it hurts your relationship with them, but two, it hurts their cash on cash returns because they're just putting so much more cash in. Yes, having a loan for $20,000 will also hurt your cash on cash, but not like it will if you're actually having to put pure equity in. The next comment they say is properties in low cost of living markets are attractive if you don't have a ton of initial capital, but there is a downside. Buying a $120,000 property and renting it for $1,500 a month is great on paper, but roofs and central HVAC systems cost the same on a rental unit that rents for $1,500 and a rental unit that rents for $2,500. We talk about that a lot in commercial real estate, right? Because we see, you always hear, hey, just scale, right? Because if you scale, you kind of start to minimize a lot of these issues. It's incredibly true, right? I mean, that $20,000 HVAC system that I had in that property would have accommodated, I mean, more than, I'm in a 30,000 square foot office building that I bought now back in 2019. That is probably about as much as I spend on the units here, maybe a little bit less, but you get my point. Like, that's a lot of money for such a small property. So if you're going to go and buy commercial real estate when you're first starting out, yes, these lower price points are very attractive. But they are going to have some aspects of the property that you'll have to maintain and repair that are just as expensive as they would be on a bigger property where you're making more money. So that's why commercial real estate is so attractive. You can go and raise capital for these deals and go bigger, right? Because investors do want to be in real estate. A lot of people that you know probably would love to invest with you if you're able to go and find really good deals. I'll give you an example. So we built the wash back in 2021, delivered it in 2022. If you're not familiar with that property that I did, it's a 6-bay car wash that I converted into 5 micro restaurants and a bar. Well, it's 2,400 square feet total, right? The size of one restaurant. It cost us over $1,000 a foot to build that out. To put that in perspective, you can build a house for $150 a foot, $165 a foot, $1,000 a foot, because even though it's only 2,400 square feet, I still had a lot of fixed costs that were the same no matter how big the restaurant was. I mean, to a certain extent, right? We still had to build a grease trap. we still had to do a walk-in cooler for every single unit. We still had to do a hood vent for every single unit. Same with, hand washing sinks. There's a lot of infrastructure there that, regardless of whether we had 6 restaurants in 2,400 square feet or 50,000 feet, it was basically the same cost. So it can be very expensive doing these, doing those smaller deals. It just can't. I like them, depending on what it is. This person is saying a single mom with younger kids and a good government job is absolutely the best tenant. So talking about the quality of your tenants, that's why a lot of banks much prefer bigger corporate entities as opposed to smaller mom and pop shops, right? I love small business as much as the next guy, probably more than, to be honest with you, because most of my tenants are small businesses, and I'm very focused on that intentionally. But I also do have to pay a price as an investor for doing that. We get a higher benefit on the community side of things, but banks don't like it as much. They just don't tend to like credit, and they can be generally fine with it. But if you're comparing a local Mexican restaurant that has 5 locations to a Dollar General, they're going to give you more money and better terms to buy a Dollar General all day than they would the local Mexican restaurant, right? They just see it as riskier, for many reasons, some valid, some not. But it is something to keep in mind. What kind of tenants are you going to be having on your property? This person's saying the tenant is going to make or break your real estate investing experience. Bad tenants are going to make your life hell, especially if you were self-managing to start. Please don't self-manage. Please don't self-manage. I tell the members of my mastermind, yes, can you self-manage? Of course. Can you make an extra $500 or $1,000 or even $2,000 a month by self-managing? Sure. That's a lot of work to save that little amount of money, right? And I'm not saying that $24,000 is a little amount of money. I know it's a lot. But when you start to put it in perspective that your time is better spent finding the next deal and building a portfolio versus managing what you already have, and you can get away with paying somebody only $24,000 a year to take it completely off your hands, it's a great way to, that's tough to argue against, right? Tenants do make or break these commercial real estate investments. If you're buying a property, right, that is commercial, you're probably going to pay some sort of cap rate if you are buying it with a tenant in place, right? You're buying the net operating income that comes with that property. The lease there and the tenant that backed the lease are incredibly important, because if you've got a bad tenant that just decides they're not going to take care of the property, or they're going to stop paying rent because they can't or they don't want to anymore, or they just move out, you've lost all of your income, right? And so make sure that you have a good relationship with your tenants. I go out of my way to build relationships with the tenants because I want them to know if there's ever any issues, call me. I'll take care of this. I genuinely care about what you've got going on. They say you can analyze all you want, but at some point you're going to need to take action and start making some offers. You will learn as much through the process as you can through all the podcasts and books in existence. Damn, is that true? That's so true. Yes, you can stack up knowledge from podcasts, books, going to coffee with other investors, right? I always felt like, oh man, before I bought my first property, I was like, there's one more coffee I've got to have and then it's going to click. There's one more book I'm going to read and then it's going to click. It honestly didn't click for me until I bought my first deal. Having gone through that experience, having actually raised money from investors and having those conversations, having actually applied my knowledge of how to lease and manage properties, having actually gone through a full cycle on a deal, I learned infinitely more than I could have from just reading about it, right? And I'll put it this way. I went and took a CCIM development class. It was the first one I think they ever offered. I want to say it was back in 2016, 2017. And this was when I had done my first development deal. We had started in 2015. So I had gone through the actual hands-on, boots in the trenches experience of developing my first piece of commercial property. And going through a class afterwards, because I still wanted the formal knowledge, I was honestly really surprised. One, I knew everything that they covered in that class and more. And a lot of the stuff that they talked about in the class, and I'm not talking about CCIM. I love CCIM. I'm just saying the difference between hands-on experience versus classroom. I felt like walking out of it, if I hadn't done a development deal, I don't know that I would have had my head wrapped around how they actually work. I really didn't. Because the amount of, I mean, maybe I'm just much more of a kinetic learner, but going through the process, you learn it infinitely better than you would otherwise. I just genuinely believe that. So look, if you're sitting there and you're thinking to yourself, okay, well, yeah, but how the hell do I go about doing that? I've read the books. I just can't find my first deal or whatever. I mean, one, you're in the right place, right? I've got a bunch of podcasts and a bunch of videos on all of this stuff, right? So one, get the base level knowledge, right? Build the foundation of the house you're building, right? But two, get out there and find a partner. Find someone that has been there and done that, and find a way for you to do a deal with them, right? That's what I did. My first development deal, I partnered with an experienced developer who had done everything before. I went out, I found the deal, I ran the project for 2 years. And of course, they were there to help me, right? They provided me with their resources. They had all the cash. They brought the debt to the table, right? So I didn't have to worry about any of that. And without that, I don't know that I could have gotten that first one off the ground. I mean, it would have been unbelievably difficult. So find a partner. And there's a couple of different ways that you can add value to people like that. One, go find the deals, right? Be the person that understands how to look for, analyze, and find these deals, because that's incredibly valuable no matter where you are, right? If you're just getting into commercial real estate, start knocking on doors, cold calling, network with everybody, and underwrite a deal a day. We've got a couple of videos on this channel about underwriting. I think I was telling somebody this morning, the most valuable skill that you can have in commercial real estate, hands down, is being able to find and analyze deals. It doesn't matter what direction you want to take in commercial real estate, whether that's brokerage, development, investment, doesn't matter. Being able to find and analyze deals is hands down the best skill that you can have. So dive all in on that, figure out how to do it, and then start making those outreaches, right? I would get to know investors really well, learn what they looked for in a deal, and then I would go find that deal. Would I get a minority share of it? Of course. I'm not the one bringing the cash. I'm not the one bringing the track record. I'm not the one bringing the bank to the table. But I found the deal, and that's pretty damn valuable to a lot of people, right? Let's see. This person's saying buy quality in order to hopefully buy once. This can be appliances, flooring, etc. I would also say that applies to buildings. I mean, yes, you can get cheaper buildings that are more run down, but unless you have a lot of experience repositioning these assets, going through renovations, and actually dealing with the headache that can come from older, worn out systems, right? I mean, the plumbing at Peerless Mill is an absolute nightmare. There are pipes running zigzag across that property. It's 32 acres with 29 buildings on it. We know that there's plumbing and sewer there, but in many cases, we can't find it. Like, we don't know where it goes. We don't know where it starts. We don't know where it ends. I mean, the property's over 100 years old, right? Now, I'm able to work through that. I've done this before, but it's still a headache for me, right? Like, I have the experience of doing this stuff. It's still a lot of work. To be fair, even the city doesn't know where some of the plumbing is, which I think is hilarious. But it just shows you how complex these older properties can be. So buy quality, Yes, are you going to pay more? Sure. But here's the thing. If you have a nicer property with a more stable tenant, I would bet over a 5-year period, comparing that to a higher cap rate property with a lower quality tenant, you're going to put far less work into it. And yeah, maybe you'll get a little bit less of a return, but I would bet if you actually go back and run the math of having to replace an HVAC unit or having to replace a roof because it went bad, or your tenant moves out and it takes you 6 months to fill it, I bet it's not all that different. And it's a lot easier to deal with a property that has a high quality tenant that doesn't require a lot of maintenance than it is to do the exact opposite. Let's see. Real estate investing is not passive. Don't let others fool you into thinking that it is. I love that because we talk all the time about passive income in commercial real estate. Is it more passive than other types of income you can make? Hell yeah. But is it truly like sitting back, reading a book, sipping coffee, until 10 in the morning, doing nothing but collecting checks? No, it's not. It's way more passive than your W-2, hands down. It's more passive than a lot of things that you could do. But there is still work required, right? You still have to go out and find these deals. You still have to go out and manage the property manager. Like even if you're not the one managing it, right? You still have to manage the property manager or manage your accounting team to make sure that you're getting your taxes done properly and K-1s are being sent out to investors. There's still always stuff to do. Now, that being said, I probably spend fewer than 5 hours a week on my portfolio. It's over $65 million in assets, right? Because I've got the right team in place to do all of this stuff for me. I've got an accounting team. I've got a property management team. I've got a leasing team. I've got a site selection team, right? I've got guys that are going out there and looking for deals for me so that I don't have to be the only one that's always doing all of that. That's how you start to really scale this and make it more passive, but it's never truly passive. Let's see. The best syndications don't often advertise and are based on who you know. That being said, I'd advise to buy your own properties whenever possible to retain full control of decisions. I like that because I have a lot of investors that, look, I've got over 2,000 investors on my investor list, right? They invest in deals with me that I'm buying. Every now and then I'll have people say, I want to invest with you because I want to learn how it works. Well, that's great. And I'm always happy to be as open of a book as possible. But when you're investing in a syndication, you're really not seeing the day-to-day. You're really not going to learn all of that much. You're going to see what it's like to go through as an LP investor. And you're going to see what it's like to, sign the legal documents and to get your monthly or quarterly updates and to get your distribution checks and maybe, an annual site tour or something to that extent, right? Outside of that, there's really not a lot of opportunity for you to go out and actually learn what's going on or how they're doing a lot of the things that they're doing. I love investing in syndications, right? I'm at a point now where I'm starting to consider that a lot more because I used to be on the active side, so I kept my cash for me to do my own active projects. Now I'm moving more into the, I'm going to probably start investing over the next few years more into other people's deals and letting them do all the work so that I don't have to do that anymore. But buying your own properties and actually going through the process is still the best way to learn. Last one I'll cover. Finding a quality property manager is nearly impossible. They'll never take care of the property like you do. Painfully true. It's just one of those things. Are you willing to give up 100% of the control for 80% of the quality, right? And to me, the answer is absolutely, right? I don't have the time to go and do all of this. Is every single little thing going to be done to my exact specs? Probably not. But 80% is better than 80% of somebody else doing it is 100% better than me having to do everything. Hands down. I couldn't scale. I couldn't do all of this without it. So that's why I was saying earlier, you still want to keep an eye on the property managers. You still want to have conversations with them. You still want to be active. If you completely abdicate and give it 100% to a property manager for them to do everything, you're probably going to have problems because they're not going to take care of it in certain ways that you would, right? They might be looking at it as, I need to make sure that, we're returning our owner the distributions that they want, thinking that's what matters to you instead of I should go ahead and replace this HVAC unit before it becomes an issue because that's what the property owner would probably prefer, right? It's spending money. But you might prefer that to keep your tenants happy, to keep them there longer. You know what I mean? They're still thinking the right way based on what they may think you want. So that's why it's so important to just keep all of that kind of in check. All right, guys, I'm going to go ahead and open it up to y'all's questions. We'll dive in on these. Geez, we got a lot. Okay. Keep them coming. I love this. Angela and David are saying, as a recent retiree and commercial real estate novice, I wish I knew that support from other commercial real estate agents and brokers is difficult to find. Unfortunately, true. It's unfortunately true. That's when I was first getting started in the industry, what I found, because I started off with a boutique firm, right? A boutique developer. I was basically the only guy in-house doing any commercial real estate brokerage. Everybody else was on the project management, construction, and development side. I had no support. Nobody wanted to teach me how to do anything. Nobody cared about the leasing side of things. They were more focused on actually building new projects. And I figured, hey, I'm going to call these other commercial real estate brokers. I'll buy them lunch. I'll pick their brains. And there were some that were willing to share information and be supportive and help. Most were not. In fact, I had some very bad conversations around that of agents basically blatantly saying, go do your own work. I'm not going to help you. And it's not like I was asking for help. It's like, hey, talk to me about how you came to this valuation for this property. I'd be very curious to know that, right? Because I didn't know. I literally had an agent one time that was like, that's not my job. You need to figure that out on your own. I was like, okay. I mean, I get that. So yeah, it could be very difficult to find support from other commercial real estate agents and brokers. And that's why it's very important to, one, make sure that you're at a great brokerage with a great team. But two, just build your own network, join a mastermind, join CCIM, join ULI, and go spend time with those people. Jonah is saying, hi, Tyler. Good morning, Jonah. Thanks for joining us. Rich, what's going on, man? He's saying, one, on vacant retail space, does finish out on a play? Does finish out play a big factor on lease-up time? For example, listing shell space for lease and giving tenant improvements versus having the space being white boxed. It's a good question. So it really depends on your market. I hate to use that as the answer, but everything in commercial real estate depends. It depends on where you are, the size of the space, depends on the quality of the building. Like if you're in, downtown Nashville, I would say go for white box, right? Because whoever's coming in is going to want to completely build it out on their own, right? But if you're out in the suburbs, you may want to just go ahead and finish it out to a certain extent, right? I mean, maybe there's no interior demising walls, but go ahead and put the restrooms in the back, go ahead and put the drop ceiling in, just things like that to help a tenant move faster. It depends on how your local market is moving. If you have a lot of tenants and there's a lot of space, more often than not, they're just going to go to the next space and sign a lease at whoever's going to make it the easiest on them to where they don't have to wait. But if you're in a market where it's really tight, there's a lot of tenants looking and there's not a lot of space available, so high demand, low supply, you may be able to just get away with white boxing and giving them tenant improvements because they're more willing to spend the time to actually build out their own space. He's saying, too, on your 1031 exchanges, exchange construction for Peerless Mill. So it seems like you were able to do a 1031 construction on a property you already own. I didn't think that was allowed. Good question, Rich. So it's because I am not 100% controlling of or 100% owner of either entity. I am a partner in both of them. And so what we're doing is we're buying in as a tenants in common into the property. So it will own its own piece of the property. Rich Hilarious is saying, Tyler, have you explored salon suites? We lease 2 spaces and operate them, and they're quite profitable per square foot. $750 to $800 in rent for 120 square feet. We're looking to build one from the ground up now. I have not personally looked into doing any of these like on the investment side. When I first got started in commercial real estate brokerage, we did have a pretty big salon suites that did this exact same model. They went and built it out, and then they just subleased basically each individual suite to somebody else. They can be incredibly profitable. Yeah, I mean, there's a lot of plumbing that you've got to do in these build outs. There's a lot of like kind of headache with the build out side of things. But if you're willing to go through that, absolutely. I mean, the deals seem pretty lucrative and they work. Andy is saying, I'm under contract on 5 acres currently zoned residential. County would allow rezoning to light industrial. If I build a small multi-unit flex space, the county said I wouldn't be able to rent to any commercial tenants. I mean, that wouldn't make any sense for the county to say that if they allow you to rezone to light industrial. They may be being very technical with the way that they are saying commercial, because technically there is a difference between a commercial tenant and an industrial tenant, right? So they may be thinking that when you say commercial tenants, business, right, like retail or something to that extent, whereas you're technically talking industrial. So I would just make sure to review the zoning code and be 100% confident in what light industrial will allow you to do in that space. Shouldn't matter in light industrial if you're doing flex space or one giant warehouse, right? As long as the businesses fall under that zoning code, you should be fine. Rich is saying, when buying a commercial property, do you hire a general inspector or bring in the trades? I had an inspector come in on a flex, and they missed a ton of electrical issues. He's saying, in hindsight, I think it would be better to hire an electrician, HVAC tech, roofer, etc., instead of an inspection report. So, Rich, I think it just depends on what you're comfortable with. I never bring in trades just to go through and inspect a property. Couple of reasons. I mean, one, I'm comfortable enough with my own inspection of a property that if we need to get an inspector in there, I kind of know what's probably going to come back, but at least we have an official report. Yeah, they're probably not going to catch every single electrical issue. I mean, there's just no way that any inspection is ever going to catch 100% of everything. It's impossible, because if you think about it, they can't see through walls. There's no telling what's going on in there. So that being said, I mean, hey, maybe on your next building, you have an electrician come through and take a look at everything. But generally, I don't even have inspections done. I mean, I can kind of tell what's going on with the property whenever we're taking it over. But I do like getting PCAs. It's a property condition assessment. A group like Terracon will do that for you. We use Terracon for a lot of things. They really kind of make it simple for you. And I mean, they'll put together like 100-page reports. But there's just some things that you really can't catch. That's what I was saying earlier. You may want to just budget for things that pop up. You never know. Options Equity Series saying those grease trap trenching can get so expensive. Yeah, talking about the wash. Yeah, grease traps, very expensive. Because I mean, for a grease trap, they're like 1,500 or 2,000 gallons, right? They're massive. I actually shared a picture of me standing in one that we put in at my hotel. I mean, I'm at the very bottom of this giant pit, and I mean, it's a lot of digging, and that's a big piece of equipment. So it starts to add up for sure. Let's see here. I got somebody dropping Bible verses in here. That doesn't really make any sense for commercial real estate, but cheers to that. Andrew is saying, what can I expect from a second interview for a commercial real estate investment sales internship? It's a good question, Andrew. Let me know how the first one went and kind of what you're going for, and I'm happy to kind of give you my feedback. But if you're going back for a second interview, I would imagine they probably liked you in the first one. I mean, look, the biggest thing as an intern is that you don't want to be a burden on whoever you're interning for. It's really tough to like, I do interns almost every summer. It's really tough to deal with them sometimes because they're great people and they work hard. There's just such a steep learning curve for commercial real estate that it makes it really tough to kind of bring them on, catch them up to speed, and then actually have them doing anything. So, I mean, honestly, like if I were you, I would try and showcase your knowledge around commercial real estate and kind of what you've been focused on and what you've been learning so far. Rich is saying, would you self-manage even as a commercial broker? Hell no. I don't like self-managing properties. I really don't. I don't know exactly what you mean by as a commercial broker though. But no, I mean, I'm not into self-managing properties. One, it allows me to keep every conversation I have at arm's length, right? So I don't have to worry about feelings or upsetting somebody or whatever, right? But two, also it protects me, right? I get to, have a filter of a property manager because sometimes somebody will say something and I just default to like they're being insulting, like, oh, you want to dispute your cam. I mean, you can dispute it all you want, but the cam is what the cam is, like, idiot. So having a property manager there helps me filter those conversations a little bit better. So yeah, I'm very against self-management. That being said, I mean, I own a property management company. So I guess in a way I do self-manage, but I have a whole team that does all of that for me. It's very different than being the actual person managing the properties. I don't like that. I mean, in my opinion, like self-managing commercial properties is kind of like being a part-time or like aviation enthusiast, right? Like, yeah, you like to go fly, once a month or whatever. You got your pilot's license. That's great. Those are the people that are more likely to get into aviation accidents than your commercial guys that are doing it every single day. So I think that's a great analogy for commercial real estate. Somebody that manages part-time is probably going to make a bigger mistake than somebody that manages full-time. Hasten Liu is saying, hey, Cobble, been following you for 4 months. One question, as a foreigner, how do you deal with investors like us, and how can I stay longer in your country for investing purposes? Great question. I mean, I've got a lot of Canadian investors, so foreign investors that jump in on our deals. It's more paperwork on our end, simply because we have to make sure that we're complying with a lot of the reporting. We absolutely take on foreign investors. So, I mean, if you're interested in investing in any of our projects, go to tylercobble.com/invest. I think I also have a link in the description below. But and you can sign up and get on the list and have a conversation with me about jumping in on our deals. As far as like staying longer in the U.S. For investing purposes, man, I have no idea. I don't really know how any of that process works, and I feel like today, with where our current administration views immigrants and foreigners, I don't know that that's going to be possible. But hey, we've got Zoom, we've got Google Meet. I'm always happy to FaceTime and show you the properties you invest in. So Austin is saying, what percentage do you ask for a minority partner or deal finder or assignment fee? That's a good question. It comes down to a couple of things. One, how good is the damn deal, right? Like if it's a great deal, I'm probably going to be asking for a little bit more. If it's an okay deal, probably a little bit less, right? As far as like a deal finder fee, I mean, just for example, that first building that I bought that I was telling you guys about earlier, I got 10% of that deal just for finding it and putting it together. I rolled in my commissions on it for another 15% equity, so I had 25% equity total. So that was kind of how I did it. I had 10% in the development deal that I did without having to bring any cash to the table or signing on the debt. So, I mean, I think a minority partner, it depends on your level of experience, how much involvement you're going to have. Are you signing on the debt or not? Are you bringing cash or not? 5 to 10% of the deal, maybe. It depends. It just depends on how big it is and stuff like that. As far as assignment fees, I mean, I've never really done that. Again, if it's a very good deal that is going to appraise for way higher or is going to make them a lot of money, I've seen 6 and even 7-figure assignment fees. 7-figure assignment fees are rare, but they do happen. More often than not, 20,000, 30,000. That's probably what you're going to see. But again, it depends on the deal size, right? I mean, if you're assigning a $200,000 deal, $20,000 makes no sense. Colin is saying, Tyler, can you explain how the wash pencils at $1,000 a square foot? That seems so high to me. Yeah, it is, but our rent is also 4 times market rate. So, I mean, we're getting over $120 or $130 a foot in rent, whereas most restaurants are like 25 or $30. So maybe 35 today. So that's how it pencils. I mean, it's a smaller square footage, right? Smaller space. So Because of that, you're able to charge higher prices per square foot, which, the tenants are looking at, they're not looking at it on a price per square foot. They're looking at it on a monthly basis, right? So it pencils for them on a monthly basis. Scorpion is saying, how can I protect, lost my space here. How can I protect a commercial wholesale flip during a JV to a more experienced investor? Which contracts should I use for protection? How can I protect a commercial wholesale flip during a JV? Scorpion, I'm having a hard time understanding the wholesale flip during a JV. I mean, if you have a partner on this deal, which is what it sounds like, and you're wholesaling it, I would just get a wholesale contract in place. Just call your attorney and have them put it all together for you. Kevin is saying, good morning from Lakeland, Florida. Good morning, Kevin. Thanks for joining us. Allison is saying, hi, Tyler. Great meeting last night. Wish I had your accelerator program before getting into CRA. I appreciate that, Allie. Good to see you. Allie is one of the pod members that I was telling y'all about earlier that organized an event down in Atlanta. So excited to be diving into that. Yeah, I wish I had the accelerator program before I got into commercial real estate. I mean, it's everything that I wish I had back then. It's a great group. Jonah, hi, Tyler. I'm 23 and doing commercial real estate appraisals. How can I apply what I'm learning here to a first deal or switching to work on the investment side down the road? Jonah, you're in a great spot, dude. I mean, like I was saying earlier, if you can understand how to better analyze deals, you can partner with the people that have money. So what I would say is spend a couple more years on the appraisal side. Make sure that you get a wide variety of work and just go all in. Analyze as many deals as you possibly can, because then you can partner up with investors and say, look, I have analyzed 2,000 deals in Davidson County, Nashville, Tennessee, right? I can come in and help you guys, better evaluate your properties, this, that, and the other. I mean, that's a very valuable skill. That's the one thing that I think can be really interesting about commercial real estate is you don't have to be a well-rounded investor. If you are outperforming other people in one aspect of it, that's all it takes, right? For example, I'm really good at finding deals and putting deals together. Like that is hands down my superpower. I'm better than a lot of people at that. Not everybody, but a lot of people. I can't stand raising capital. Like it's just not a thing that I enjoy. Dealing with the lending as well. Can I do it? Hell yeah, absolutely, dude. I will pound the phones and beat my chest until I finally get enough investors into a deal. But I'm not spending 100% of my time whining and dining investors and dealing with banks, right? I'm spending more of my time finding deals. Whereas there are guys and gals in commercial real estate that focus on raising capital and building those relationships. Why not just partner with them on a deal? Make your life so much easier. That's kind of how I feel about it. So if you're really good at the deal valuation side, man, that's a huge skill that a lot of investors will find very valuable. Man, you guys don't realize how hard it is to just talk for 45 minutes straight until you get up here and do it. Daniel was saying, what type of commercial real estate would be good for someone in Chicago? Thanks, brother. Any type of commercial real estate, man. I think it just depends. I know that's a terrible answer, but it depends. Are you in downtown Chicago? Or are you in the suburbs? I think more than anything else, it's all about the deal. I think any type of commercial real estate can be a great investment. I really do. I think office could be a phenomenal investment today if you get the right deal. And I think that's what really matters. So, Daniel, I would spend some time studying the market and try to figure out where the opportunities are, right? What is selling for a price per square foot that's cheaper than anything else? What opportunity are people missing? What types of businesses are looking for space that can't find it? All that stuff matters. Joe is saying, other than talking to a realtor, what are some ways on finding rental rates for flex to underwrite? You could go on LoopNet and you could look at what people are asking for rent. You could also go and look at flex space investments that are for sale in the area and see what the rent rolls. Those offering memorandums might have rent rolls in them on those properties that are for sale. So you can go and do that. Hands down, though, the easiest thing is to just call commercial real estate agents in your area. Jonah is saying, can you do a video where you go through LoopNet CoStar properties for sale and how you determine which ones to look further into? Sure. Yeah. I mean, I've got a couple videos like that on this channel. I just haven't done it in a while. But yeah, I'd be happy to do that sometime. Ronald, I have light industrial with 7 California tenants. Congrats, Ronald. I thought that was going to go somewhere else. That was it. All right. Scott Laughlin, what are your thoughts on the price we pay and the value we receive for the commercial real estate we have diverged over the last couple of years? Thoughts on the price we pay and the value we receive for commercial real estate? Oh, how they have diverged. Oh, Scott, I think some parts of commercial real estate have gotten too expensive, and I think some are on sale. So he's basically saying, like, we're paying more or we're paying less, but the value that we're getting in return is not as great. Back in 2013, when I first started looking into deals, you could buy a self-storage facility at like a 15 to 18% cap rate. Nuts. 15. Can you imagine a 15 to 18% cap rate on a self-storage facility today? Pretty wild. I would love that. Oh my gosh, if I could find them. That would be killer. Today, those same buildings are below a 7% cap rate, right? So the value has exponentially gone up. It's the same with multifamily. Like, I stopped recommending to my investors to buy multifamily back in 2018. Back then, I saw that cap rates had gotten too compressed. The value didn't make any sense. You had a lot of dumb money going into apartments, in my opinion. There's a lot of dumb apartment investors that are willing to do all of that work for very little return. And that's dumb. Like, I'm not here, like, that's so much work and so much risk to make a 12% IRR. Why would you do that? Go invest in a REIT. I mean, come on, invest in real estate stocks. You'll get a 9 to 11% return. Like, why even bother? You don't have to do anything for it. Why bother with all the effort? So yeah, I mean, I think that there's a big divergence between the two. And I think that today it's more about finding the right deal, right? I mean, that's why I won't touch apartments. It makes no sense to me. A lot of industrial doesn't make sense anymore. Are you kidding me? Some of these industrial buildings are going for 5% cap rates. That's insane. It doesn't make sense. So, I mean, that being said, I mean, there's a lot of private equity and hedge funds and REITs that have jumped in and raised a lot of capital. And guess what? They can afford to get worse returns than you or I could. And they don't care. They're happy to do it because that guy at the hedge fund has been given $1 billion that he has to spend in the next 12 months. And they don't care how he gets it done. He's just got to spend the money. And that's how that happens. So yeah, I mean, I'm not a fan. I do think there are still great returns out there. I mean, we just exited a deal last year that had a 41% IRR, right? You couldn't do that in multifamily, or most people are not, right? So I think the deals are out there. You just got to go look for them. Nate Scott, what return are you seeing on land leases to credit tenants, and how do you calculate the lease amount? Good question, Nate. I'm going to be honest with you, man. I am not your guy when it comes to land leases. I'm in Nashville, Tennessee, where we have way too much land to really be doing a lot of land leases. That being said, I mean, they're not entirely uncommon here. It's just not, I mean, well, let me rephrase that. They are entirely uncommon here. They're few and far between. So I would probably talk to somebody in New York about how they figure that out. At the end of the day, it's kind of one of those things where you're probably not going to be able to find a lot of comps for it, and it's whatever you guys kind of come to an agreement on, honestly. John is saying, when pulling a list for direct mail and industrial buildings, what are you filtering out for data? Probably the only filter that I'm going to do is based on square footage, right? How big is the space, and how long has the owner owned it? Because if they've owned it for more than 7 years, chances are good it's not a private equity firm, it's not a REIT, it's not a hedge fund, it's probably a smaller investor, right? Because most of those guys are selling every 5 to 7 years. So you have a better opportunity to make a deal with those guys. Joe, what impact do you think tariffs will have on the market? I can only imagine industrial in the U.S. would grow for manufacturing. Yeah, I mean, I think that industrial could certainly grow. I think that tariffs will have a horrible effect on the market overall, though. I mean, that's the funny thing about tariffs, man. They're not a good idea, and there's no point in having them. if we wanted to have more manufacturing in the United States, incentivize manufacturing in the United States. Don't punish American citizens for finding cheaper goods abroad. I mean, the problem is, if you look at the way that the U.S. has treated blue-collar jobs for the last 50 years, of course we have a lack of manufacturing. Nobody wants to get into those kinds of jobs. Because you're basically shamed for it. Everybody's told you have to go to college, you have to get an office job, you got to do this, you got to do that. Dude, there are guys that are HVAC technicians and electricians and plumbers that I know that are making six figures a year and crushing it and doing better than a lot of the people that I know that graduated from college with a graduate degree. Obviously a tangent here, but I think that there's a lot more systemic issues that we have with regards to manufacturing. So yes, could industrial grow because of that? Sure. We're starting to see a lot of vacancy sitting on the market in industrial, though. We've gotten overbuilt in many markets. I also think if tariffs go into effect, they're going to directly hurt the American consumer, who is the person that is buying all of the goods that is being stored in all of these warehouses. If the American consumer stops spending as much money, then everybody's going to have a problem, right? I mean, you look back at 2008, 2009, nobody was really spending any money, and it caused all sorts of industries to come to a complete halt, right? So it's kind of scary. Saying I should make a video about that. Yeah, I mean, I wouldn't mind. Problem is, like, that ventures so far into the political realm. I don't like getting political. So I don't know. We'll figure out how I could navigate that. Maybe I could just keep it straight to the facts and try to keep my opinions out of it. Scorpion is saying, how can I have you analyze a commercial mixed-use building deal in New York City with a motivated out-of-town owner? Scorpion, the only way to do that, honestly, is to be in the mastermind. We analyze multiple deals a week with members of the mastermind, Siri Accelerator. So you're welcome to go check that out and book a call with me about joining. Otherwise, I would just say, see if you can find an underwriter local to New York City that could do that for you. All right, last two questions because I have got to run. Got to get on site at Salt Ranch, see how our construction is going. Rebo is saying, what markets are you most interested in? Nashville, Tennessee, Chattanooga, Tennessee. I think Louisville, Kentucky is interesting. I think that Birmingham, Alabama, Huntsville are interesting. I love Charlotte. There's some really cool pockets going on there. I think Denver's really interesting. Austin used to be one of my favorite cities outside of Nashville, and I think that Austin is a bit overbuilt. So it'll be interesting to see what happens there over the next few years. I'm trying to think of where else. I mean, it's probably kind of it. I mean, those are the major ones for me, at least. Ted is saying, what techniques do you suggest to find a tenant before purchasing a property? One, hire a commercial real estate broker. Two, go to any sort of business networking events. Three, get some signage up and run some ads. I mean, there's a lot of things that you can do, but hiring a broker that is very familiar with the market makes it a lot easier. So, for example, we did a property here in East Nashville. Well, that's where my brokerage team works. That's where I work. We spend all of our time over here getting to know everybody. And I put a building under contract. We had a lease signed before we closed on it because we knew all of the businesses that were looking for space. The other thing you could do is go and build a relationship with a business that is looking for space and then go buy a building specifically for them. We've looked at doing that too. So you basically have a tenant in hand as you're going through that. Appreciate you guys joining me today for another round of office hours. We do this live every week, Tuesdays at 8:30 a.m. Central Standard Time. Love all the questions. This is great, guys. This might have been the most questions that we have gotten in such a long time. So I appreciate you guys jumping in and doing this. I'll see y'all in the next one. This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more.